Good morning, everyone. We seem to be getting a few people into the webinar now, so thanks for joining us. So this is an Insurance Times webinar on insurers and coronavirus. Will the crisis speed the digitalisation of legacy systems through the use of integration tools? And the webinar today is in association with DataStax and FinCons. So we've got some great panelists here for you today. We have Giuliano Altamura, who's the Financial Services Business Manager at FinCons Group, Amarjit Basra, the data architect at DataStax. We also have Patrick Callahan, the VP of Value Engineering at DataStax, Des McCavitt, COO of the insurance practice at FinCons Group, and I'm Matt Scott, the Insight Editor at Insurance Times, and I'm going to be your host today. So if I can just run you through a bit more about our panelists today. So Giuliano is the Head of Financial Services Business Unit at FinCons Group. He has worked for FinCons for more than 16 years, and prior to that he worked with another Tier 1 systems integrator involved in the FSA market for a decade. Amarjit Basra, he's currently the data architect at DataStax, and he has been working as an architect and software developer since 2001. Patrick Callahan is the global technical lead for partners at DataStax. He is an architect and developer and has been working with distributed systems for the last 15 years. Des McCavitt, he joined FinCons in May this year as COO of the insurance practice. He was previously the COO of a global specialty insurer, and prior to that was a founding partner in a management consulting firm specializing in the insurance, financial and professional services sectors. He is a proponent of using digital ways of working to improve customer service, operational efficiency and risk control. So first of all, Des, if I can come to you, please, and if you can just give us a bit of an introduction and an overview of the current state of the market and how things are starting to change and what impact coronavirus has had there as well.
Yes, thank you, Matt, and good morning, everyone. So to answer the question, how is the market coping with COVID-19 or C19, as I think we now refer to it? I think the headline response to that question is remarkably well, but my old school reports spring to mind when I think of the headmaster's annually repeated comment, could do better. To consider the performance of the market as a whole, I think is perhaps going at too high a level. So I think we should think about it possibly under three different headings, being direct to customer themes, which I would refer to as the retail market, the broker and delegated authority or MGA distribution channel, which is a combination of retail and commercial business, and then the wholesale market, which is a combination of specialty insurance risks and reinsurance. I think each of those three sectors, let's say, within insurance, have coped in different ways. Taking retail to begin, that's business to consumer. Much of it's done direct. And my own experience, I haven't used my car much at all for the last 3 months. I just had the renewal quote through. I didn't get a refund for the time I didn't use the car, and my renewal quote's gone up 15%. So I don't think the retail insurance market in this country is doing too badly. Insurance premiums generally are going up. Much of the way in which the product is sold is already digitized. And so the issues, if there have been any, haven't necessarily been so visible to the customers. Looking at broker distribution and also delegated authority distribution, or MGAs as we call them, I think it's a much more variable picture. Some of the brokers and MGAs are much smaller organizations than the insurers they are working with, and therefore there's been a broad range of responses in that area that have either enabled or in some cases inhibited the distribution of products to insurers. So I think that's a range from great to not so great. And much of the reason for that is that some of the brokers and some of the MGAs lack the infrastructure, and by that I mean the digital infrastructure, with which to maintain the solid standards of service and delivery that they were delivering pre-COVID. Moving to the wholesale market, this is really characterized by much lower volumes of higher value business, almost all of which is distributed via brokers. And I think as a marketplace centered around Lloyd's of London, that could be viewed as one or possibly more decades behind the direct-to-customer distribution channel. But that being said, the feedback I've had from a number of C-suite executives is remarkably positive. And I think what's happened here is there's been an enforced move to remote working. And because of the low volumes of this kind of business, people have been able to collaborate using what we might refer to largely as old-fashioned technologies like email and video calling in order to negotiate and renew business. So what I hear is that a number of budgets are up, both with brokers and underwriters, again reflecting that the market isn't doing too badly. I guess in summary, we could say that one thing that I'm hearing a lot about is that remote working, albeit enforced, has enabled a large proportion of the workforce to enjoy a much more balanced existence in relation to their work. And nowhere is that more evident than in those who are traveling into central London, which can be a commute of an hour or more each way, each day. So I've heard a lot of feedback saying that remote working is good, though it's not good for everyone. And it's very important to understand that some are suffering isolation, some employees are sharing in accommodation that isn't conducive to this kind of remote working. And we can't sort of leave those people behind. The strains, again, looking universally, not just remote working isn't great for everyone, but something that does affect particularly younger people is how do we train and develop young people when they're working possibly in isolation, possibly remotely, more than they are working in an office environment. And so training and development in some cases has stalled. And that's something that we will have to look at in future. Access to systems and data and response times. I've heard quite a few stories where those, let's say, everyday occurrences that would be happening in the office haven't happened to the same degree of efficiency in a remote working environment. Data security, that's another angle to remote working. How do you maintain data security in an environment which is outside the workplace? Who's looking at the screens? Who's got printed documents lying around? These are things that we wouldn't normally need to consider in a central workplace. New ways of working for employees, new ways of managing for managers. How do we bring people into this new world and train them in being productive in this remote environment? It's very different to being in the office. You can't just tap someone on the shoulder and say, how do I do this? If you make a video call, it's probably going to be a 10 or 15-minute call, as opposed to a voice call, which might have just been 2 or 3 minutes. And let's not forget the C-suite. I think board decision-making in the COVID-19 environment has been strained. And it's been strained because all decisions have had to be made in a crisis with an eye on the employee impact, the environmental impact, because let's not forget that particularly in the wholesale markets, insurers are big users of aircraft travel to overseas territories and so on. And this has put a stop to it. So how do we move back into an environment with less travel? And of course, shareholder impact. Do we pay a dividend, or do we retain the dividend and the risk of making our shareholders upset in order to fund what we need to do for our business? And how do we maintain an audit trail of those decisions that will defend us against allegations of negligence from our stakeholders. So I think the good news for everybody on this call is that technology can help in all of those areas of strain. And I would hope that at the end of this seminar, we will understand a little bit more about the how and the why, and get some sort of context for that, so that we see tech as a way to lead us into a new way of working for the future, which will benefit everybody. And by that, I mean the stakeholders in the insurance industry.
Thank you very much for that introduction, Des. And I think, Giuliano, now if we can come to you, I think you've got a short presentation on the top 3 things insurance firms can do to boost their digital touchpoints.
Yes, thank you, Matt. Good morning to everyone. It's a pleasure to be here to be able to present our experience in this space. Before answering the question, let me just give you a brief introduction on FinCons. Let me share the screen for a second. Okay, you should see the slides now. Okay. So FinCons is a consulting company, is in the market since more than 35 years, working on different industries in media, energy utilities, transportation, manufacturing, and of course also financial services. By the way, financial services is the widest unit that we work in, and our activities are spreading over 6 countries. And we employ kind of 1,700 people, more or less. We are doing well in the last years, and that's the reason why we could boost our international expansion also in new countries. What we do is a kind of 360-degree services to clients focused on the system integration, so from high-level consulting to design and implementation of custom solutions or solution based on third-party products, as well as, of course, application maintenance. Digital transformation is a key activity for us. We are assisting so many insurance companies in this space, and I can say that on our experience, of course, the COVID crisis has boosted the need of embracing the digital transformation, also for those companies that was more maybe reluctant before the crisis. No? Everyone entering the lockdown has discovered that yes, it's possible to work from remote, it's possible to meet in remote, and it's possible also to run business in remote, especially the insurance one. So there is a huge push on digital transformation, even more than before the crisis. And so we, as FinCons, are continuously struggling to find the ways to enabling our clients to embrace this digital transformation. Digital touchpoints are the key of the digital transformation, intended both as Des was saying, business to consumers application, so no digital direct channels that could be on the web, on the mobile, also it could be on conversational user interface based application like chatbot, virtual assistants, and so on. But digital touchpoints are also applications for enabling brokers or sales agents to be more effective in their daily work. Digital touchpoints has to be nowadays has to be nice looking, has to be fast, to be learned, has to be concentrating the needed information for a specific profile. And at the end, the most important challenge is that to enable a nice user interface, a nice user experience at the end, one of the key topics that industries, that insurance company has to face is the performance. And so one of the key aspects is how to arrive to provide these clients a fast enough, let's say, application. So here are the three things that insurance can do from the technical point of view to arrive to this. So the first one is to use single page or application paradigms. So embracing technologies like Angular, React, progressive web application, of course HTML5 and CSS3. And this is moving the logic of the application into the browser, and so much faster because it doesn't need a reload of the pages. And so it's a technology that is almost on the table of everyone. I've seen in the last year and a half, all the new applications are embracing these technologies. The second answer is the integration layer. It's very important to have an effective integration layer that, why? Because all these digital touchpoints are not living alone. They have to interact with the legacy system. They have to publish information. They have to invoke services for doing transactions and so on. So it's very important that a modern integration model is put in place, maybe based on an enterprise service bus or an API gateway through microservices and so on. But these two answers are, not so new to the market. The fact is that as soon as these applications are integrating legacy systems, if you embrace these two levels of technologies, you just implement a very fast front-end application, fast accessing to the back-end services, but at the end, you may have still problems in performance in retrieving data. And it's most probably happening when you have complex screens. For example, the typical example is the 360 degrees picture of the client, where you have to publish so many information coming probably from different legacy systems and so on. So the third answer is what is called the Digital Integration Hub. It's a new kind of technology that enables to set up at the end a fast data repository providing information in a real-time fashion to the digital touch points in the front end. And I'm sure we have the space in a while to explain how. Right, Matt?
Yes, thank you very much, Giuliano. That was really helpful. Thank you for that.
Well.
And Des, I believe you have kind of a few words to say on this as well, on the most important things around kind of boosting digital touchpoints.
Yes, thank you, Matt. I think really my focus is on the stakeholders in the organization and how we can use digital technologies to enhance our service quality, our business efficiency, but equally important, and I think more so in a crisis, is maintaining a digital audit trail of our actions. Because if there's one thing that I can guarantee you, it is that we will see a huge upsurge in allegations of negligence against directors, against suppliers, against customers, following the COVID-19 crisis. And the reason for that is because boards have made decisions, officers and senior managers in organizations have made decisions which, obviously made with good intent, have intended to benefit a certain, let's say, stakeholder, maybe without recognizing the negative impact it's had on another stakeholder. And now, where we've got to, I think, is highlighting something called ESG, which has been around as a term for, I guess, a couple of years. ESG means environmental, social, and governance. And it's a kind of extension of corporate social responsibility. And it's used quite commonly in the investment community, where investors will invest in ethically sound organizations. And those organizations have a responsibility, or take it upon themselves to be responsible for managing their relationships with those three areas. And of course, logically, you'd say that will include matters closer to home, being shareholders and employees. So I think we have to look at technology way beyond delivering the product of insurance to our customers. Technology can help in all of these areas, and we have to find more adventurous ways to bring it into the workplace and integrate it with our ways of working, with our ways of managing, and with our ways of running companies. And it's using that kind of thinking that will help us, as I said earlier, use technology to help us get to the workplace of the future, which will benefit all of those groups.
Absolutely. Thank you very much for that, Des. Okay, now we'll move into kind of the wider panel discussion of this webinar. And for the attendees there, if you have any questions you'd like to ask of our panelists, there should be a button at the bottom of your screen that says Q&A. If you can type any questions on there, then we'll drop those into the conversation as and when we can. So first up, if we're looking at kind of improving digital touch points, the front-end applications are an important part of this. So if I could come to you first, please, Patrick. What do you think are the most important things to consider when looking at improving the performance of an existing front-end system? Are you there, Patrick, at all?
Yes, sorry. So the digital hub obviously is a very important place for that. And what we want to look at is, sorry, am I starting my video? Oh, yeah, sorry. Yeah, so the digital hub is a very important part of that. And in terms of touch points, what we want to be able to do is to start from a point of thinking about the customer and then working backwards. Think about what the customer wants from the application or the services that we provide, and the interactions that they have with our website and all the different parts of our company. And then we work backwards from there. We think about how they're going to interact, how we're going to capture information, how do we be more proactive in our ability to serve the customers better.
Okay, fantastic. Thanks. And Amajit, do you have a take on this at all?
Yeah, certainly. Thank you for that. So one of the other things that we need to be conscious of, as well as the front end, we need to look at that complete ecosystem that you have within the organization, not just insurance, financial services, but every organization, every enterprise now is having to handle the challenge of the volumes and the variety of data that's coming through now. And similar to what Giuliani said, was that traditional systems at the moment, so whether that's your mainframes or your relational databases that a lot of our financial institutes are built on, they're based around what we call that fixed schema. They were built at a point in time for a particular purpose. And one of the problems that you have is how do you handle both, not just structured, but semi-structured, but unstructured data? How do you do that? And when you want to speed up and have access across your business flow, your applications are having to go through each particular point, that sharded data, to get a complete customer view, maybe look at it from a fraud protection, upselling, cross-selling. And so having the ability to be able to have a flexible platform, data platform that can abstract that information, give you a common layer on which to modernize. And some of these things we've touched around, moving towards things like API-based, REST-based, containerizations, or cloud really helps. And what it also does is it allows you to look at some of the things that Des has mentioned around data governance. I can now control my flow of data, the orchestration of the applications, accessing the business flows, where the customer's touch points have come through. So kind of my takeaway on that is that the application layer on its own isn't just going to, you can certainly put improvements into that, but it's a very holistic process you need to look through and modernize that. And what we're seeing is that one of the things that COVID is doing is it's kind of forcing organizations to kind of look and reinvent and really invest how to modernize and how to improve their efficiencies and processes.
And you said kind of COVID is acting as a bit of a catalyst to change. What would you say are the biggest difficulties with making these changes and integrating these different systems that you talk about?
Certainly. So one of the things is, I guess, the speed at which that organizations and enterprises are having to adapt. You've had stakeholders, and that's not just external customers, that's internal users now who may have been used to, having to work to a very paper-based physical system, now having to work remotely. You're now having to be able to, have a look and redefine the way that your operating model is having to work. You have to now also look at the concerns of the customer. You still need to be able to provide a complete 24/7 service. You need to understand, any issues around customer. As well as that, you need to be able to, at the same time, is identify fraud, risk. Maybe there's new risk models that you need to evaluate now, because there's certain new dimensions that come into play. So that's what's now forcing organizations to work more efficiently, save money, but at the same time provide a better, more engaging and interactive service with both external stakeholders and internal stakeholders.
Fantastic. Thanks for that, Amajit. And Giuliano, if I can just come to you on this now. I think you had a couple of slides to present just on how kind of data architecture plays into this as well.
Yes, thank you, Matt. After the words of the colleagues, it's clear that performance is a key aspect, and managing of the data is a key aspect as well to enable digital transformation to insurance companies. What I wanted to share is, following what I was saying before, is how it's possible to improve performance using a data integration hub. So in this schema, you have in the top part, of course, your digital touch points, whether they are web-based, mobile-based, conversational, or whatever you want. You have your ESB and API gateway, and in a traditional design, you implement the integration through invoking services provided by your legacy systems or by external systems. This is a typical setup that is in place since years now in most of the insurance companies. The problem is that more often the legacy systems is not one, but is a silhouette, ecosystem of legacy systems, each managing a particular business, maybe more than one managing a particular business, because maybe the company is arriving through maybe an acquisition, so more than one system is in place. So it happens that it's complex to integrating all of these systems, and above all, if you have a complex screen in the front end showing many information, at the end you have to wait for the slowest of the legacy systems. So that's the main issue. This setup has a kind of limits, because you may have old legacy systems that have some limitations that you have to face. So for example, you may have problems in capacity of legacy systems. Why? Because each and every possible touch point that you want to add to your ecosystem that is getting digital will insist on the legacy systems. So each new channels you want to open maybe to the customers, you have to invest again in the legacy system to enable them to have the right capacity. So if you have a mainframe-based application or old-fashioned solution, they may be expensive from this point of view. Another point is the peaks of load from new touch points. Of course, more and more you are publishing touch points to the web, and it's difficult to foresee the peaks of load. So you will have to size your legacy systems in order to be able to manage these potential peaks. So again, it's a matter of investing on this infrastructure that may be expensive. Another key limit that is very typical is the 24/7 availability of legacy systems. Maybe they have windows of batches during the night at the end of the month, so that they are not simply 24/7 available, and that's requiring something to be added. Last, again, it's a theme of performance for enabling and engaging UX, as we were saying before. So how can we address this? We did the Digital Integration Hub, and the solution is a kind of this. So you have in the middle a new high-speed data repository that it is typically built on a NoSQL database, like the one provided by the colleagues of DataStax, of course, and you will have a real-time, or better, near real-time procedure for updating the data into the data lake. So at the end of the day, you will have a data lake with a kind of mirror of data coming from your legacy system in a near real-time fashion. And this means that you can rely on this high-speed data store for creating a set of APIs that are able to providing the data to front ends. And you will arrive into a much faster retrieving of this data. Why? Also because when you capture the modification of the data into the legacy system and you transfer this modification into the data lake, you can add logic, and you can define calculated fields, or you can create denormalized structures. At the end, structures of data that are optimized for the specific needs of the front end. And in this sense, you will arrive to a speed of retrieving data much higher. Not only, but you move capacity from the legacy system to the data lake, that can be, of course, in the cloud, in a container, so exploiting the real benefits of the client. So you take capacity out of the legacy system into the data lake, and so you lower the need of capacity into the legacy systems. Of course, 24/7 is guaranteed by the kind of caching of the data into the data lake, and peaks of work are managed easily in this new wave of data management technologies in the cloud that are by design scalable much more than traditional data management platforms.
Fantastic. Thank you very much for that, Giuliano. We're hearing quite a lot there about kind of the problems and how kind of the fast data lake and stuff like that can overcome it. Amajit, I know one of the things you spoke about when we talked about this ahead of the webinar was around how machine learning and artificial intelligence can help. Can you just share a bit about that, please?
Yeah, sure. So a lot of organizations are starting to adopt or use machine learning and AI because it can help around a number of areas, around the accuracy in terms of your pricing. It allows you to gather better insights from the data that you have, because remember, we're in a world now where we're starting to get lots and lots of data that's coming in, run better models and perform smarter analytics. So if I just touch on a few of those areas, you've got around fraud detection, the ability now to use my artificial intelligence to go through data, do the mining, historical data, identify patterns, maybe even try to triangulate, occurrences that took place both during or post, an event. Then you've also got the aspect that it helps around automation, around either the onboarding process, claim process. And what it does is if you can automate and add into there some intelligence, not only does it reduce your cost, it allows you to make faster, more informed decisions, gives you transparency, but also consistency as well in terms of what your flows and how you came to that decision. And the final thing that I'll touch on is that it can also help around giving that personalized engagement back to that customer. So you can start to build that digital image of your customer or your client based on the information you've collected, whether that's social data, geographical data, historical data, give that personalized view, engagement back with them, understand the risks that you have, maybe upselling, cross-selling. But all of those things help. And all of those things are possible when you can merge that complete ecosystem of having your data in that single plane and be able to build in live streaming, eventing, and adding into that machine learning and AI.
Okay, fantastic. Thanks very much for that, Amajit. What I'd like to do now is actually turn to our attendees a bit, and if we can run a bit of an audience poll here. So hopefully that is showing up on your screens now. The questions we have are: what are the main barriers to boosting digital touchpoints? And the options: legacy systems, speed of response, data volume, or cost. So I'll just let that run for a little bit there, and then we'll come to some of our panelists and just see what they think of the findings. I just want to about a third of people have answered there. I'll just give it a little bit longer. The numbers are still going up. Okay, we're about half of the people have voted there now. Just give it a couple more seconds, and then I'll share the results, and we'll see what our panelists have to say of the findings there. Yeah, it seems like things are slowing up now in terms of the number of people that have responded. So I'll just end that there. And in terms of the results, they should be on your screen now. And legacy systems had 55% of the votes there. And then after that, it was the cost, the volume of data, and the speed of response. If I could come to you first, Des, what do you think of those findings, and are they surprising, and how do you think what advice would you give to our attendees looking to overcome these?
To answer your first question first, Matt, is it a surprise? Absolutely not. I think our industry, and particularly the broker distribution and wholesale markets, are almost hidebound by legacy systems. And everyone is trying to move to a new environment. But of course, the new environment requires an investment, a significant investment. And then one is challenged about how do you maximize the benefit of the legacy data. So this is a challenge that I think the whole industry is facing. And I'm very happy to say that at FinComs, my colleagues, and there are so many of them, we've got Giuliano on the call, are very good at moving legacy data into an environment where it can be accessed and integrated with new data from new systems to give that continuity that allows us to look at decision making in a complete environment. In other words, using our legacy knowledge as well as our current knowledge of situations, but also at lightning fast speed.
Absolutely. Thank you for that, Des. And Patrick, do you have anything to add on this, on the findings?
Yeah, it's something we see across the industry. It's we see it in retail, we see it in banking. The legacy systems were never meant to be, highly true. The throughput that we see today, they were never created for that, and that's why a lot of the technology and the disruptors use NoSQL technology. It's mainly because of that throughput. But taking data off of legacy systems and providing it in a different context with things like customer experience and other products and more customer-based data gives real context to the data in legacy systems. And that's really important when we think about customer engagement around data-driven enterprises, because what we all are striving to do is to become data-driven. We want to make sure the data and information in particular is the thing driving our decisions and the actions that we take, because then we can start to become more automated and more practical about what we actually we're doing for our customers.
Fantastic. Thanks very much for that, Patrick. So moving on to the next section of our discussion here, and the Digital Integration Hub. I know, Giuliano, you mentioned this briefly earlier, but I think what would be great for our attendees would if you could just explain a bit more on what the Data Integration Hub is and how it can help businesses to maximize their digital touchpoints.
Thank you, Mark. Yes, also looking at this poll is a confirmation of what I was saying before, in a sense that legacy systems are presenting some limitations that in most of the cases has to be overcome in order to enabling good digital transformation solutions. So the Digital Integration Hub has the capability of enabling another level of performance. We are talking about, we have been working for a big insurance company, Tier 1, in implementing this technology, and consider that process that is enabling a broker for looking at the 360 degrees picture of the client, from the search of a client, okay, to the screen with all the picture of the client. And they were struggling with the integration of 7 legacy systems, and they were struggling with an average time for retrieving the data of more than 20 seconds. And this, of course, a lot. So with these new technologies that we implemented, this time has been lowered to much less than 1 second. So it's a huge difference. You can imagine how the application can be faster to be used, and how the users can be happiest. No? And the secret is the technology pattern that I described with the legacy, with the data lake and the real-time ingestion procedure. We need a NoSQL database for this because we want a very highly engineered data ingestion procedure. We don't want to implement tens, hundreds of ETL procedures. That's the story of the past. We want one single super ETL procedure that is capable of updating in a near real-time fashion data lake. And for this reason, and we also want this ingestion procedure to be able to adapt the data lake following the modification on the legacy systems, also in terms of data structure. So if for any reason in the legacy system there are tomorrow 2 new attributes of the clients, I don't want to do anything. I want those data to, from that moment on, to be present into the data lake. And the ingestion procedure we have implemented does this. And for doing this, you need a flexible data management platform. No? You cannot rely on a old-fashioned database, no, with the fixed structure, as Amarit was saying before. No, we need something very flexible, and with the NoSQL class of platforms, and in particular with the Cassandra provided by DataStax, this is made real.
Thank you very much, Giuliano. And Amarit, if I could just come to you on this point, why is the Data Integration Hub so suited to building scale and improving efficiencies?
Yeah, absolutely. So I will try and answer this in relation to, I think, the poll that we just did. So in there, one of the important things, or one of the drivers around legacy systems and how they are kind of very much slowing down or being an inhibitor to modernize. Now, when you start to look at the solutions like a integration hub, what it does is you have your existing systems of records that have your data. What we're doing is we're providing this consolidated layer that gives you access to that in a very low latency system. But what you don't have to do right from the off is rip everything else. You can still have your systems of records. You can have that consolidated layer, and you can start to phase out those legacy systems at the time and at a pace that's suitable for you. So unlike most systems where it's a complete change, this here is a controlled migration that you can do. And I think that's really powerful, because it means what you're doing is you're going towards a data-driven enterprise. And at the time that's right, you can then start to reduce your total cost of ownership on those legacy systems.
Okay, fantastic. Thanks very much for that, Amjad. Very, very well explained. And Patrick, if I can just come to you, I think you had just a couple of points to make on the difference between modernisation and transformation as well. I'll just bring your slides up for you.
Great. And just to add to that, one of the aspects of the digital hub that's really critical in my view is the ability to move to the cloud or use the cloud better in terms of what you want to do going forward. The digital hub itself can expand into the cloud. It can work on-premise, it can work in private cloud, in public cloud, and any cloud in the future. So if you want to take advantage of things like cognitive services or AI or machine learning in the cloud, that's very achievable and very, very simple to do. So I just wanted to touch on two things that I think are really important. We see the digital hub playing in a lot of spaces around mainframe offloading and migrations. But when I talk to customers, we see two big trends emerging. One is modernization and the other is transformation. And I just wanted to take the time to show the differences between these. So modernization is obviously updating the hardware, adopting new processes, updating software, mainframe offloading, and similar things. But the idea is to improve the processes and move into a more modern way of working. Digital transformation is a little bit different, and Amjad and Juliana both touched on the idea of a data-driven enterprise. And what we see is that customers are looking towards transformation to be the big part of the 5 to 10 year strategic goal of the company. And this is more around people, processes, and technology. Right, so it's a fundamental change how you run your business, and this is where we get into multiple or exponential growth of companies, and it's about using the data and information that data controls, making that the most critical asset within the enterprise, and making decisions based on data rather than anything else. And if you just go on to the next slide. So I just wanted to highlight data in particular, because data is a differentiator. It's not a coincidence that the biggest companies in the world are the biggest collectors and sharers of data in the world. That's not a coincidence. So data and what you do with it is a differentiator. If you think about the insurance industry, a lot of people have the same applications. They create the same business logic. But really now it's about the data that you have and how you can turn that into value, how to change data into information. And data is valuable. It has value, but it has what I call a half-life. So data right now is in the optimal form, right? So real-time data is the most effective it can be. The longer you take to use it, whether it's a day or a week, then the value of that data diminishes. So we have to think in real time. How do I engage my customers, and in particular customers, in real time? How do I have a system that enables real-time access and real-time insights? Because as soon as I lose or leave that data for any amount of time, we start to lose its value. The other thing that we touched on was the idea of fluid data. How do we move data sets to where we want them to be? And how do we move data sets in and out of services to be able to take advantage? And the example earlier on was, if I have a lot of data being collected by customer engagement or customer experience, how can I use that in maybe Google's cloud or Azure's cloud to provide insights and feedback back to my business? And lastly, data is not information. So we work with a lot of companies around how do you turn data into information. And one of the most important parts of that is providing context. And like Giuliano said, it's about bringing data together. So having data in isolation is probably the lowest point of value for that data. And a simple example is, if I know the position of a car or a vehicle, and I know where it is, that doesn't provide any value to me. But if I can understand where that car is in relation to the last second, 10 seconds, 60 seconds, now I can provide context on that. Right? Now I can say, well, I know which direction the car is moving. I know how fast it's moving. I know if it's accelerating or decelerating. I know that if it continues in a certain way, it will reach a certain point in a certain amount of time. And that's value, right? So the point here is that data on its own isn't that valuable, but data in context with other data provides value, and that's the information that we want to help our enterprises use.
Fantastic, thank you very much for that, Patrick. And Des, can I just come to you on this point of the integration hub as well, and just kind of get your thoughts on kind of what Patrick said there, and the wider integration hub and how it can help businesses.
Yes, thanks, Matt. Yeah, to follow up on Patrick's very eloquent description of the benefits, I think we have to, again, try to think laterally about this, which is what are all the things that we can say this hub delivers? Let's start with the idea that with an increase in remote working, for anybody using let's say old, as in 2008 technology for their core database, there is a data security risk. So we can overcome that by using modern technology that covers that risk and enables us to work not just more securely, but also more speedily in terms of remote working. So you've got two benefits from that aspect. One is productivity improvement, and the other is better data security. Looking at the interactions with customers, with brokers, again, what you have is a much more speedy and secure interaction, enabling you to give better customer service. And that should in turn lead to better quote-to-bind ratios, in fact, more quotes, better quote-to-bind ratios, and improved retention of policies. Going internally, this data hub is creating an audit trail of all the interactions we have, not just with our customers, but also with our employees, and none more so than with our managers and directors who are making decisions based on that data. So having the data there in real time enables better decision making, which in turn should lead to better margins in the underwriting portfolio. It should lead to better decision making in claims payments, and ultimately broadening the margin or widening the margin for the underwriting business. So I sort of look at this the other way around and say, why wouldn't you? Why wouldn't you invest in these new technologies? Because the benefits, if you were building a benefits case, are many, many times greater than the cost involved in investing in this new technology.
Okay, fantastic. Thanks very much, Des. And we've actually just had a question come in from one of our attendees, and they say that one of the big dangers in the long term for a business is putting itself in a highly dependent position on its IT suppliers and being locked into significant ongoing spend. They say that to avoid this, it makes sense for at least a medium-sized insurance business to ensure it's got full control over its data and its suppliers, so that it can switch without too much disruption. Patrick, how would someone go about doing this?
Yeah, it's a great question. It's something we get a lot of questions around, especially the cloud providers and on-premise private clouds. So one of the things you need to do is to ensure ensure as much as possible to use open source technology. And I mean that in the sense that we don't want to be in a position where we're locked into any vendor in particular. So DataStax and Cassandra, one of the great things about Cassandra is it's an open source database, and moving in and out of Cassandra and data stacks is very simple. But one of the most important things is the ability to move, to be flexible around where you deploy your data. Now, whether it's on private cloud or public cloud, it's very simple. And there's a couple of really important points here. When you think about using proprietary technology, now I'm just going to name some technology names here, but if you think of, you know, the AWS's DynamoDB as a database, or Azure's Cosmos DB or similar, what happens is you get to a point where you're locked into a cloud, right? And that doesn't sound like a big deal because, you know, every 3 to 4 years, you know, you might reassess your cloud usage. But in terms of you make big bets on your technology. But what happens is there's two things that happen. One is that when you get to a certain stage of paying 50, 60, 100 million a year in infrastructure costs to AWS, you get less and less of a discount if you're not flexible. If you can move from Amazon to Google to Azure, you will get huge discounts, right? Because they will want to keep you. They will want to retain their biggest customers. So if you're inflexible and you've tied all your boats to this ship, you know, you can't move very far. So you won't get any discounts. So we're talking about millions of dollars here. And I think about this in the simple way of an iPhone. If you think about your iPhone and you say, I put all my photographs on my Photos app. I buy all my movies on iTunes. I buy all my music on their music app. I use their iMessages for all my messages. If I want to move to an Android phone, it's very, very difficult. The cost of me changing is huge, not just in time, but effort, resources, all the things that I need to do. That's difficult. I'm not going to do it. So Apple have me. But if I use WhatsApp for my messaging, and I use Netflix for my TV and shows, and I use Spotify, now the ability to move is seamless. Now I can move to Android. I can move to, I don't even need a phone. I can go to an iPad or Surface or a laptop. And that's real power. That's flexibility. That's agility. That's, you know, something that we're all striving for. It's difficult being an architect right now, you know, with all the options, you know, all the services and platforms as a service infrastructure. So being, you know, I think having the ability to be flexible and agile with our data, it will be a huge differentiator in the future.
Fantastic. Thank you very much for that, Patrick. Unfortunately, that brings us to the end of time for the webinar, but a great point to finish on there, I think. And I'd like to just take this moment to say thank you to all of our panelists, Giuliano, Amajit, Patrick and Des, and also to DataStax and FinCons for help making this webinar happen for you all as well. We've got 1 or 2 more questions that have come through on the Q&A, and we will try and put these to our panelists offline and provide you with the answers you need on the link to the video of this webinar as well, so you'll be able to see that online. So thank you very much again to all our panelists, and I hope everyone's found it useful and enjoyable. Thank you. Bye.